Okay, we are here on the pound CAD, currently on the 15, and what I've done here is I've been very aggressive, if I'm honest, in terms of the entry. On the pound CAD we have a daily bat or Gartley pattern, and I've used a lower time entry here, quite an aggressive approach. I'm just going to talk through the higher time frame analysis. Now, while I'm talking, I am using my new microphone for the first time. The headset that I was using, unfortunately, it picks up a lot of static when I talk, so see how we get on with this one. Okay, just move that out of the way, because that's, you know what, I can put that under there, in the way of my keyboard. There we go. Okay, so this huge pattern, I think it's a bat. Yes, it's a bat pattern. And the reason why I've been more aggressive with the entry is because, let me just snooze that a moment, because I'll just draw it out like this, completion at the 886, and if we look at structure here, which is basically the wicks, you can see that price has come down into the wicks, and we've actually held that structure level. Now, the RSI went oversold as well at around 11.5, and we're starting to see a bit of a pop now to the upside. So I'm just going to put a fib on as to where targets could potentially be from our swing high to our swing low. We're going to look for that 38.2, which would be target ones. Due to the size of the trade, I wouldn't be looking at any further than that. Let's drop down the time frames then and take a look at what we see. And if I'm honest, there really isn't a great deal. What we can see is that we had a move higher here, then a small pullback. A move higher, a pullback, and then a move higher. So if we do drop down another time frame, which is the 15, we can actually see a trend. And in this trend, right down here, I notice, first of all, that we have a higher high, higher close candle. So we've had a 1, 2, 3, 4, 5-point move, a higher high, higher close candle coming into this outside return. And as we drop down the time frames again, and guys, we are being super aggressive here because we've gone from the dailies now down to the 15. We've come into the wicks. But see what we have here. We have a swing. We have a very directional move. We have a pullback for a potential left shoulder. A move lower, and this could be setting up for a head and shoulders. Okay, now head and shoulders is a key part of my trading. I trade them so often that I have confidence, if that is the right word to say in this circumstance. I'm confident in seeing certain setups that appear where I have a higher probability without any confirmation. Okay, and that's just purely by the number of head and shoulders that I trade. Now the important thing here is that I don't really have any confirmation. Okay, but what I do have is I know this type of setup where we see the pullback after a good rally and then a move into the wicks, and then we see that we start to stall. Now what I do like to see as well is the RSI on the left shoulder overbought with divergence, and here on the 15 as well. Look at the higher high, higher close we've got. And again, guys, I don't have confirmation. The price isn't telling me this is what we're doing, but just based on the number of trades that I've done, and also due to the risk to reward, this is one of those trades where you might want to take 3, 4, 5, 6 shots at it, but in order to do that you need the reward to risk. So I'm just dropped as low as the 5, and even when I'm being super aggressive like this, I still need something that's telling me. And here on the 5, if I just go ahead and highlight the wicks here and then the wicks there, what we have is technically we have held this level once, twice, 3 times, and then right here we've had a break above the triple test, a pullback for a 2618, and a 2618 for anybody that's new, swing low to swing high, and you look at buying a minimum of the 61.8 fib up, and from there we've had a higher high, higher close. So even though I'm being super aggressive, this isn't just a buy anywhere. I have now an appropriate place to put stops underneath this triple test that's violated structure. Going back to the 15, we've still got a higher high, higher close here on the 15. I've got the setup of a potential head and shoulders, no confirmation. On the 60, we've had a 1, 2, 3, 4, 5, 6 point move with a higher high, higher close. Let me just bring back on the orders, and this means then, right, just let me go to the 240. I'm just wanting to reposition those targets. Okay, targets, I want to play for the closes of the candles just here, and then which is a retest of structure highs, and then secondary targets will be that 38.2. So I'm just going to drop back down to the 15 and just work out what the reward to risk is here. Now I've only gone 10 pips below the low here, and the reason for that is if this is a head and shoulders, and that's what I'm banking it to be with the triple retest on the 5, that we should not violate this level. If we do, I'm going to be wrong, and then I'll have to wait for another entry reason, probably a higher time frame confirmation. But right now we have 24 pips of risk, playing for 72. Do believe the market can go higher. In fact, I'm actually going to base this on the 60. Because we've got the pattern and everything here is indicating we're going to go higher, I'm actually going to play for a retest up here. Okay, so be more aggressive because we have the advanced pattern that's held structure, and we've been moving in a bullish pattern. So it's 81. So that's around a 4 to 1 just there, but the real money is here at 190. And if we can get up back up to this zone, then obviously we're not in trend here actually, because the outside return is this. Okay, until we violate this level, we're technically not in trend, but this is where a little bit of judgment comes in. If we've got a move high, retracement, move high, retracement, move high, retracement, and we've adhered to structure within the bigger outside return, and bigger picture is we're going bullish, yep, there's that fine balance between being aggressive and then just being logical. So we will see whether or not my logical thinking comes off, or whether or not I've simply just given 24 pips back to the market. And we're back for the update, and I am out for minus 24 pips. What a real shame this is, because for a few minutes I thought that this thing just may go on to win, and look what happened here. And here on the 60 we came down for a double bottom, and all of a sudden, boom, price rallied up to this point. I got around 35 pips up. I sat and we were around about 730, 735, something like that. I'm thinking, great, if we can hold this and break above this entire structure level like this, we've got a real good chance here of going on to win, and the double bottom within the wicks here as well. Great. And then boom, right the other way. Let's just go and take a look at the lower time frame. I did say this was super aggressive, but I have said this before, when you're super aggressive, we need extra confirmation. And look, I got a reaction out of the market, and at the end of the day, that's what we're looking for, isn't it? We're looking for zones in the market that are going to see a reaction. And if the reaction is big enough, hopefully we will carry that through up to our targets. Just unfortunately this time, this aggressive trade lost for 24 pips. What a real shame. But I'd take it again and again if I had to.